All right, today we're going to peel back the curtain and look at what's really moving the markets. We'll kick things off with Nvidia, probably the most watched stock on the planet right now, but then we're going to zoom out, way out, to uncover this massive hidden wave of cash that could seriously change the entire game.
First up, the big one, the event everybody is waiting for, Nvidia's earnings report. And let's be clear, this isn't just about one company's bottom line. No, this is a huge stress test for the whole AI revolution and the market's belief in it.
Which of course brings us to the million-dollar question, right? Is this incredible run-up in AI stocks a real sustainable boom, or are we just looking at a bubble that's about to pop? Well, the answer might just come down to a single number.
Yeah, when those results finally drop, you can bet that every analyst on Wall Street is going to be scrolling for one specific line item. This is the metric that everyone sees as the key, the proof that all this massive spending on AI infrastructure is actually worth it.
And here it is, $35 billion. That's the magic number for data center revenue. If they hit that, or better yet, beat it, well, that's a huge sign that the AI build-out is not slowing down. A number like that would go a long, long way to silencing all that bubble talk, at least for a little while.
You know, what's really interesting is that for all the hype, Nvidia's stock has basically been trading sideways since its last report. It's been caught in this kind of tug-of-war between two really important price levels. And honestly, the fact that it's held its ground here is actually a sign of incredible strength.
So let's break down this range. Think of it like a room. Up top, you've got this really powerful ceiling right around the $200 mark. That's a serious wall of resistance. But on the flip side, you've got a rock-solid floor of support down at 164. As long as the price is just bouncing between those two, it's kind of just noise. So the real question is, what could possibly give it the juice it needs to smash through that ceiling?
To answer that, we've got to look beyond just Nvidia. We need to look at the market's hidden engine, liquidity. This is that invisible force, that powerful current that can lift every single boat or leave them all high and dry.
So what on earth is market liquidity? You know, it's actually pretty simple. It's just cash. It's the amount of money sloshing around in the financial system. Think of it like the oil that keeps all the gears of the economy turning smoothly. When there's a lot of it, assets tend to go up. When it starts to dry up, well, things can get real ugly real fast.
And here's the thing, we've had a bit of a problem lately. The US government has been issuing debt at an absolutely insane pace, basically hoovering up hundreds of billions of dollars of that precious liquidity right out of the system.
And this quote it perfectly captures the tightrope that central banks are walking. The entire global financial system is built on this mountain of debt, right? And to stop the whole thing from toppling over, they know they have to keep the system full of cash. If they stop, that ball just comes crashing down.
Okay, but right when it felt like the cash was really drying up, the plot thickens. It turns out a massive injection of cash might be just around the corner, and it's coming from a place you probably wouldn't expect.
I mean, you gotta ask, right? The government has been raising all this money selling bonds. So where did all that cash actually go? Well, the answer is sitting in the government's own bank account.
Check this out. Right now, the U.S. Treasury's account balance is sitting at about $953 billion. But here's the kicker. Their own official target is only supposed to be around $800 billion. They've got way more cash on hand than they're supposed to. You do the simple math on that, and what do you get? About $200 billion. That's a huge pile of excess cash just sitting there. And this isn't money that's going to disappear. This is money that's ready to be spent and injected directly back into the financial system. It really looks like the worst of that liquidity drain is now behind us.
Okay, so we've got this huge piece of the puzzle. A major cash injection is coming in the US. Now let's zoom out and see how that fits into the bigger global picture, just to see if the coast is really clear.
So when we look around the world, things are looking pretty decent actually. Yeah, Japanese bond yields are ticking up, and that tightens things a little bit, but honestly, everybody saw that coming. The market was ready for it. But the more important story might be China, where their central bank is actively pumping liquidity into their system, which is a definite positive.
And back here in the US, the financial system itself looks really healthy. Bank reserves are way, way above what you'd call the danger zone. And this other indicator, the Chicago Fed's Financial Conditions Index, it's basically showing no stress, like zero signs of panic in the system.
So what does this all mean when you put it all together?
We're looking at a market that has taken a pretty significant punch. It's weathered that big liquidity drain, and now it looks like all the components are starting to line up for a major shift. We are getting very, very close to an ignition point.
Let's just run through the checklist one more time. The worst of the liquidity drain, it's over. A cash injection of around $200 billion, it's coming. The banking system, plenty of reserves. Signs of financial stress, none to be found. I mean, all the fuel is literally sitting there ready to go.
And that leads us to our final thought. With all this fuel piled up and ready, the question really isn't if the market is ready for a big move, but when. How soon until we get that spark that leads to ignition?